That's right. Let's bring in financials analyst Charles Peabody of Portales Partners. He joins us on the phone. Charles, you said Goldman has tried in the past to sell the group and ran into roadblocks. Why do you think this is going to happen this time around?
Well, when I say in the past, I'm talking about the recent past, as it became obvious that these individuals wanted to move on with their lives. And when they tried to sell it, they were talking about the whole kit and caboodle. As I understand the evolution now, the Asian operation is not part of what you guys are talking about, nor is the European arm. So what was a 70-man group, they're now talking about just the U.S. operation. And so it's a smaller version of the Principal Strategies Group as it was once known.
Charlie, we heard earlier from an analyst who talked also about the Special Situations Group within fixed income trading, and that Principal Strategies is more clearly prop trading, but that perhaps
equity-oriented.
Right, but perhaps some other areas could also be considered that. I mean, do you think that Goldman is going to have to get rid of some of its other businesses as well?
Well, you know, the prop trading on commodities, they definitely will. On the fixed income side, there are allowances. For example, trading in treasuries and agencies will allow to be continued. So the commodity trading unit that J.P. Morgan disbanded and this unit have less flexibility under the Volcker rule.
Do we have any idea financially what this is all going to mean for Goldman yet?
Well, it's a net loss of revenues day one. What you hope is by putting these traders in the hands of friends, so to speak, that you'll get the business back on the agency side. And Goldman has had a very good success rate with that, where they have a top trader that has gone off and started his own hedge fund. Goldman sometimes provides seed money, but then gets flow in return.
Charles, right before you came on, our Dominic Chu was talking to us about this news, and he talked about what he called proactive compliance with the Volcker rule. How important is it for Goldman to be the first out of the gate here?
I'm not, you know, when you say proactive, it gives the impression that the company is initiating this. I get the sense that this is being initiated by the individuals within the group. In other words, they're probably being constrained in what they can do right now and in terms of the amount of capital that's being allocated to them. Because in this politically charged environment, none of these firms want a headline that says their prop trading group generated $1 billion of gains or even losses. So in a sense, you've capped the upside compensation for a lot of these individuals. So they want to move on. The other interesting thing, when you look at the bidders involved, this group needs a fair amount of capital to be allocated to it to be successful. And the names involved are all deep-pocketed firms. In other words, you're not going to get second-tier firms bidding on this. So it's a pretty small universe that can bid.
And Charles, might I ask, too, because Dominic also talked to us about what he called robust demand for these traders. How fierce is that demand going to be?
Well, you know, this group in its heyday probably was earning in the billions of dollars, although I think, you know, recently they've been scaled back dramatically. So if that's the kind of upside these guys can produce for your firm, I would expect fairly strong bids, but by a limited number of players because of the capital allocation that would be required.
All right, Charles Peabody of Portales Partners joining us on the phone talking about this news about Goldman. Charles, thanks so much. We appreciate it.